Welcome to Trading Lounge and the European indices for the 19th of January. And yesterday we'd been looking at this in two ways. We've been looking at it as a possible top in place for the DAX and looking down as wave 1 and ABC for wave 2 here, and then down for 1 and ABC back for wave 2 here again and moving down further. Or we can look at this move here as a corrective move, a bullish corrective move, as an A wave, a B wave and a C wave here. Now the thing is that it's still not that clear, because if this was down for wave 1 here and coming back for wave 2 here, it'd also be an A wave, a B wave and a C wave here for wave 2, finishing at the 61.8%, or the closest largest number here. So we could say that if the 900 here becomes the support, so we would see some sort of movement, swings across this level here, and then we can use the top one here to go long on. We can borrow this as well. We can put that over here on the second high, and if that second high is breached at that point, then we can go long from that point. Because that's above the 61.8%, and getting support on the 61.8% would pretty much give this a bullish bias. And the other reason that I like it to be a bullish bias for is the A wave, the B wave and the C wave here. It's just simply the size of wave B here, because if this was a wave 2 here, it would be much simpler and small and swifter, so if this was wave 1 coming down here and wave 2 here, you see how swift and sharp it was, and we come down for 3, 4 and 5. So we would see this is too big here, so it's likely to be more of a bullish move here. So if I just go to the, not sure what I've done here, this is my bullish count for the DAX. So looking at this as wave 1 here with an ABC for wave 2. So getting support on that 13,900 would be the first step to the upside. But I've always maintained that we would go long on top of the 14,000 here. But this would just, I don't know if this is the case here, but getting support or taking, in a nutshell, if this is going to be an ABC here, technically it would have to take that top out there. Then it makes it an ABC pattern at that point, okay? But we could move in on the 13,900 with a position, and then we can also move in on the 14,000. And of course, if this low here is breached, then we can go short from that point there. There's other ways to look at this to the upside as well here. So this was the way that we were viewing it here, as a very conservative view here, as wave 1 and 2 here, and 3 and 4 and 5. It's also possible to see this as 1 and 2 here, and then having the third wave all the way to here, and then the fourth wave to here, because that really is, the 40% pullback at that point, the 38% pullback, and then having wave 5 up here. But all the same as well, is that a classic trading levels pattern that we'd be looking for here, just to, if this was the 14,000 across here, we have the arrival, which we've got the reaction in 3 waves, and we can be looking for the next 5 waves up in this first high above the level, and then the ABC pattern, and then finding support over here. So taking that pattern here would be the arrival, the reaction in 3, up here in 5, and then an ABC pattern here, and then moving up here further like that. So this move up through here will take us into, if that's going to be the case, then that will take us into what we call group 1. So the 14,300, the 200 and the 100 area here. So they would all act as resistance points here. So it's kind of important really to track the 5-wave structure up into this base here. So be something of this nature, something like that. And yeah, so the arrival, the reaction, the first high above the level, an ABC pattern, and then further up. So getting a a small position on the 900 as a tested support, and then also getting here, that means we could probably trade up. Well, we'd be making a new high above here, so somewhere between the 2 and the 3 perhaps. We'll be able to look at that on the let's just assume for a moment that the market finds support, and we'll check it out on Monday how far this can go. We'll be able to get a better idea of the wave structures within that space. And secondary to all of this, if this low is breached, that means that you can go short from that point, because then we would need to look at this as down for 1 and back for 2, down for 1 and back for 2 at that point, and looking at a move down through here. You could probably get a better position and lift that up a little bit in that space. Now the ftse is slightly, I mean, I've had it as a bullish move. If I can just go to the 4-hour chart here first. As you know, I've been quite happy looking at this being bullish in terms of wave 1 here and 2 here, and looking up for wave 3, which really wasn't quite finished, as I've mentioned quite a few times. Or unless we look at this as 1 and 2 here and 3 and 4 here, it doesn't really look that, doesn't got the right sort of perspective about it. So I was looking at it as 1 and 2 and 3 here, and this pulling back here, it hasn't overlapped the top of wave 1, so you know, maybe we can look at this as wave 4 here. But the problem with it all was that it's pulled back too far, and also too, I can count down here now as 1 and 2 to here, and then wave 3 and 4 and 5 here. So I'm really getting a 5-wave move to the downside here. You know, maybe something's wrong somewhere. It's just that I can't see it at this stage. Just on the hourly chart here, it counts quite nicely down as 1 and 2, unless, yeah, I mean, it's not a very clear 5 waves up here either. I mean, that little spike there, I could ignore that, because I can see here I've got 1 and 2 and 3 and 4 and 5 here. So I could ignore that spike and consider that the top there. But still, we haven't made a new high above that as such. And I don't have a nice 5-wave structure within this space here. So the 1 and the 2 and the 1, 2, 3, 4, 5 here for the 3rd wave, the 4th. So really we've got a nice 5-wave structure to the downside. It's not the best looking 5-wave structure because of the angle of it too, you know. So if I was looking at the 5 waves down, I'd want to see it like that, not sort of over here in a sideways sort of manner, you know. Like the more, when you see a correction like this, obviously the sharper it's down, you know, the more bearish it is, but the more of an angle it is here. So this could just continue up through here as well. It's just that I just have to note that there is 5 waves in this structure, and unless this is the top here for the 3rd wave, so looking at copying that there and putting the 3rd wave on top there, and it's truncated in some way, and we have to look at the 4th wave here for this, so 1 and 2 and 3 and 4 and 5 going up here higher for this. So we just need to be a bit mindful of that. But once again, it's a little bit tricky too, because if this is 5 waves down, then the 50-60% retracement level is back up here somewhere. So that means that the market can have a move to here and then fail from that point. So once again, let's just assume here that, let's just say that this plays out here. That means that this long trade it'll set up here would be moved over here. Now, if you're going to go long here at the moment, then that's okay on these highs here, but you would also need to just keep the stop really tight there. So if you know, maybe if you see the DAX getting support on that 13,900, then you could buy into this and keep the stop out of the way. But you have to be really careful here, because this can just drop further down at this point as well. So Yeah, it's not presenting a very nice Elliott Wave structure to the upside. The only advantage that it has to the upside is that it's not, this market shouldn't end in 3 waves to the upside. So 1 and 2 and 3 here. I mean, it can even be wave 1 and 2 and 1 and 2 as well. So in the bigger picture here is pointing up. Right, that's what it's doing, but this structure here is like going is suggesting that the market's going to go down. So that's the spanner in the works. But a really nice support on 6.8 would do the trick there, and any move in here would be at high risk. But because we've got this impulse wave up through here, and this is all corrective here, we should be popping up a little bit higher. But you could get trapped in this space, so I'll leave that to you to figure out. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.